Welcome back to my channel. This is Finance with Dr. Ish. If this is your first time here, my name is Dr. Ish. I'm a former banker and finance strategist. And on this channel, we don't just talk about money, we explain it properly. And today's episode, we are answering one of the most important investment questions that people ask me all the time. Dr. Ish, where should I actually invest my money? And of course, we are going to be talking about this not in theory, not based on hype, but based on real platforms you can use depending on whether you live in the UK, in the United States, or in Nigeria. Because here's the truth most people don't tell you. A good investment app in one country can be a terrible choice in another. I don't know if you agree with me. If you do, please drop that in the comment section. And if you don't, let me know also in the comment section. But I reiterate that a good investment in one country can be a bad choice in another country. So today I'll be breaking this down clearly, region by region, as usual in the banker breakdown series. And I'll also share how I personally assess investment platforms from a banker's point of view. So let us get right into it. Now, before we start naming apps, yes, I need you to pause for a second because the word best is very misleading in finance. I have seen many people come up with videos, articles talking about best. And the truth is that the best platform is not the most popular one. It's not the one your friend is usually using, and it's definitely not the one that shouts the loudest on social media. So what actually makes a platform good, especially from a banker's perspective? First is regulation and security. I'm highlighting what a banker would recommend to you as the best. It's usually not the sexiest, it's not the most beautiful, it's maybe not even the loudest or the most advertised. And usually some people see it as the most boring. But here, this is me sharing with you my opinion based on over 2 decades in the financial industry, and I'm not enforcing my own ideologies on you, but this is just to guide you. And as usual, the basics, you also need to do your own research. So the first is regulation and security. If the platform is not properly regulated, then you are taking an unnecessary risk, full stop. If the platform is not regulated and there's no securities, just the same way banks, microfinance banks, commercial banks, retail banks are regulated, if that investment is not regulated and has no security, please remove your shoes and start running. Right? Second is ease of use. A good platform should be simple enough that you understand what you are doing. There's a saying that if it's too good to be true, then it's actually too good to be true. You don't want to get involved in something that has too much English and clauses that you don't have full understanding of what you're getting into. Long and short is, if there's too much confusion, please run. Third is transparent fees. I'm sure you would have come across things like that. Hidden charges slowly erode or eat into your returns. And most beginners don't realize this until it's too late. Anybody that really wants to build wealth needs to be very conscious about charges. Fourth is access to multiple assets, stocks, ETFs, different funding, sometimes crypto. You want flexibility as you grow. And like as I always advise, do not put all your eggs into your own basket, because one investment looks too good, too wonderful, giving you beautiful returns. anything can happen because each business has its risk. So in as much as the business is doing so well or investment or platform is doing so well, you should always make it a point of duty to be responsible, to care and to monitor and put your ears to the ground. So if things are going wrong, or as in some cases you have a financial advisor, he will always be on the lookout for you and tell you when to pack up and leave if the need arrives. And finally, strong reviews and reliable withdrawals, because any investment is not real until you can get your money out. So investments that have too much drama when you want to get your money out, I think you need to think 2, 3, 4, 5 times about it before you jump into it. So these are the standards I'll be using as we go through each country. I hope this makes some sense to you as we move on. So as usual, we are starting with the UK. And to the UK, which has one of the strongest regulatory environments in the world, it's a huge plus for investors. And one popular option is trading 212. This platform is well known for stocks and ETFs. Bear in mind, please, that this is just the basics. This is me just opening your eyes to investments you may not be used to. So the disclaimer here is you need to also do your research and make sure that they are investments that you are comfortable with. So this platform is well known for stocks and ETFs, and zero commission model makes it attractive for beginners and intermediate investors. Another solid choice is Freetrade. This one is especially good if you are just starting out. The interface is pretty clean, simple, and not overwhelming. So for people who want a more hands-off approach, Wealth Simple UK is worth mentioning. It's designed for people who don't want to actively trade but still want exposure to the markets. And then there's eToro. I hope I got the pronunciation right, which offers copy trading. So this allows you to mirror the trades of other investors. But remember, copying someone doesn't remove risk. It just changes how you take it. So like I said, research here is very, very important. This is me not recommending any particular one, but telling you that they are very good investment options. You just need to research to look at the advantages and disadvantages and see that which aligns with your risk appetite and your capital. So in the UK, always make sure your platform is FCA regulated. I repeat, FCA regulated and eligible for protection schemes where applicable. Remember, I said one of the things to look out for is regulation and security. If it is not regulated by any well-known body that will help you to recover your funds, please remove your shoes and run. Moving to the US, US is a very massive market, liquid, full of options, which can be both exciting and overwhelming. And of course, exciting meaning it can be prone to disaster as well. But of course, like I said, every business has its risk. Now, Robinhood is one of the most recognizable platforms. It gives easy access to stocks, options, and crypto. And it is best suited for people who understand what they are doing now and can manage the risk. So if you don't know anything about crypto, please don't just jump into it. Find people that have done that same kind of investment. Look for feedbacks, look for reviews, real reviews, not fake reviews. Another one is Fidelity, which is more traditional and extremely strong for long-term investors. I always advise, I'm not a supporter of quick rich schemes, even if I've fallen prey to quite a few over the past years, and I run away from them. So I look more to building wealth with long-term investments. So if you're thinking about your retirement accounts like your IRAs or Roth IRAs, Fidelity is one of the most respected names in that space. Don't forget, do your research. Then there's Webull. My apologies to my American audiences if I'm not pronouncing these things right. So it appeals to more active traders. It offers advanced charting tools. So it's not always beginner friendly, but also very powerful. And like I said, when you're starting something new, always start small, and with time, you scale higher when you have a hang of things. And finally, Acons. This is ideal for people who struggle to invest consistently, it automatically invests fair change through roundup, which is a behavioral win for many people. So it just, it's like an auto debit, helps you to invest even when you've forgotten. And in the US, always look for SEC regulation. Remember the UK, I said FCA. In the US is SEC regulation and SIPC insurance, which protects investors up to certain limits. Maybe not everything, but to a certain limit. Of course, that should not give you reason to just invest wildly without doing your own research. And of course, as usual, we must still come back to Nigeria. This part is so important because Nigerian investors face unique challenges like currency risk, access to global markets, and trust. Major issues Nigerians are facing is trust. And one popular platform is RiseVest, which allows Nigerians to invest in US assets from Nigeria. This is especially useful for people looking to hedge against naira depreciation. If you're in Nigeria, you already know that the value of the naira just keeps dropping and dropping and dropping. There's also another one called Chaka, which offers access to both Nigerian and global stocks. Now, these ones mentioned are not the only investment platforms, they're just a few. There are quite a number of them. So these are just a few for you to, as usual, do your research and decide that which works best for you. Right? So Cowrywise is also very excellent for people. They've been around for a while, focused on mutual funds, long-term goals, and disciplined investment. It's simple, very simple, structured, and beginner friendly. I highly, highly recommend. And then there's the ARM Stocks app, which is more traditional and suits professionals who want broader portfolio management. We also have Bamboo and quite a number of them. There's Piggyvest, quite a number of them. Information is all out there. You do your research, but this is me exposing it to you in case you're not aware or scared to try. Just pick one and start. Now, in Nigeria, always check SEC registration, custody arrangements, and how funds are actually held, and of course, your ability to withdraw if there is problem. Okay, this is very important. Now, let me tell you how bankers usually accept platforms like this. First is licensing. FCA in the US, in the UK, SEC in the US, CBN or SEC in Nigeria. No license, no conversation. Second is asset protection. Schemes like FSCS or SIPC matter because they protect investors if the institutions should fail. Always have that in mind. Institutions can fail. Third is onboarding and exit. How you enter matters and how you can run out matters. So if it's easy to put in money but hard to take it out, that is a red flag. And finally, customer support. When something goes wrong, and eventually it will, in some cases, you want responsive human support, not talking to some AI or some bot and nobody is all of a sudden unavailable after you've invested all your money. So these factors matter for more than just flashy ads or where they use influencers to confuse people into investing. Normally, when it's too flashy, I'm always very, very skeptical. So who should actually use what? So if you're in the UK and you're just starting, platforms like Freetrade or Simple keep things simple and controlled. If you're in the US and actively building income, a mix of Acorns for automation and Robinhood for flexibility can work, of course, with discipline. And if you're in a Nigerian professional, combining RiseVest for global exposure and Cowrywise for structure creates balance. The goal isn't to use every app. The goal is to use the right combination for your life and income. I'll leave you with these final thoughts. Don't follow hype, follow clarity. The best investment platform is the one that fits your goals, your country, your risk tolerance, and not what is trending online. All right. So if you enjoyed this breakdown, you've got something new, please share in the comments. If there's any aspect you want me to also build on more, any confusion, any question, I will definitely respond to your comments. And if you enjoyed this breakdown, please don't forget to look out for other videos on my channel. And as usual, don't forget to like, share, and subscribe. I will see you in the next video.